Good morning, everybody. Welcome back to the Everyday Growth Advisors live stream. I hope you guys are having a great day. Welcome back to another growth webinar, and this is going to be a special one again on how to day trade. I hope you guys are excited. Okay, well, right before I get into this webinar, actually, I want to go through a little curious thing that happened yesterday right after we went and did our fundamental analysis on Intel. The ticker of the week had a nice little pop from 48 bucks to 50 bucks overnight, and now it's kind of licking its wounds. Looks like it wants to make another run up here. So let's see what happens today. I do like the prospects of buying a $55 call leaps for next year and write this one out for a nice little profit. I think that this stock is oversold, and I think that we should definitely take the advantage of this positioning right here. So that continues on there with Intel. And also, if you hedged and have been hedging with me for the past week or so, you would be happy to know that, this is that moment we have all been waiting for. It does seem like we are going to kind of correct down here. Might kind of fake out and then instead go back up. But then let's see if we can actually come down on the SPY, NASDAQ, and the Dow Jones, all three at the same time. That would be like a nice triple threat, like the Mike Tyson triple TKO knockout or something like that. That would be nice. But let's see what happens. Everything's looking weak here, and I don't want to get into too much of it, but it's looking good, guys. I think our setups, everything that we've been setting up for, is looking extremely good. Okay, so let's get this webinar going. Okay, let's get it, guys. Let me change the color here. Okay, so today we're going to be focusing on day trading. Okay, and we did scalping on Tuesday, so I want to definitely take this opportunity to teach you guys about day trading, because it's a different kind of style. Okay, I know with scalps and all we had a specific style, and so now with day trading you're going to look at a different kind of specific style. Okay, the first thing about day trading, and let me just get this out here and use maybe Facebook as an example, because yesterday I took a day trade on Facebook, which turned out to be a pretty nice day trade. Okay, key things about day trading. First of all, day trading is a art form of understanding good supply and demand and price action. Okay, you need to be able to tell what the previous high of the previous day was and then act accordingly in the current day. Okay, the previous day's pivot points are going to act as the current day's direction for breakouts or anything related to the idea of you taking a trade within that day. So let's say, for example, yesterday, right, we had the beginning of the day starting somewhere here, right here, this big green candle here. This was the beginning of the day, and you realize I'm using a 5-minute chart here. Okay, for day trading, you want to do your analysis on either a 5-minute or a 10-minute chart. Okay, for technical reasons, you don't want to go into a 1-minute chart because it is going to give you too much anxiety. Okay, this is just my 2 cents. Take it or leave it. It's my advice to you. 1 minute gives me way too much anxiety to see so much price action happening, and I like to keep it at 5 to 10 minutes. So it gives me a nice little room to play with throughout the day. I don't get stopped out. I don't get I don't get freaked out by sudden movements. Okay, so we saw a nice little buy up and then a sell off with Facebook through the first of the day. Now, I have a little rule about day trading. Okay, and I tell this to my mentees on the Everyday Growth Advisors mentorship program, which, by the way, today we just completed day number 3, and they were really thankful for day number 3. Some of these testimonials coming in today are really beautiful, and I'll show you guys those later. But I always tell them that when you're taking day trades, my style is to wait 30 minutes at least. Wait 30 minutes after the market opens, okay, and then make your move. All right, you want to see how the first few 5-minute candles open, which would have been 1, 2, 3, 4, 5, 6 candles, right? And then you can start to make a decision on what you want to do. Okay, and if you would have waited about 30-35 minutes, what happens is you get to see what happens at the European close, right? And also the London markets, which have already closed. Okay, So you get to see how two stock markets are closing, and then you can decide how you want to play out the day. Okay, I like to specifically wait 30 minutes. Another reason is there are a lot of orders that are on backlogs that sometimes need to clear from the trading houses. Now, obviously, they don't take 30 minutes to clear, but it takes 30 minutes for the orders to go through and then for other traders to realize what is happening. So I like to wait a good amount of time before I take a day trade. Now, this is obviously not including scalping. Scalping is in a world of its own, right? With scalping, you don't care. You're in and out. I already said this many times. Scalping is like it's like doing a really quick one-night stand, right? And day trading is like a one-night stand, right? But except for you're not staying over, right? You're just getting in and you're getting out, right? And then swing trading is more like a more than one day thing. You know, you're kind of like in a relationship, but not kind of in a relationship. You're kind of like in between. And then position size trading, that's like, oh, you're in a relationship with that stock, right? So there are different ways to view that. And, you know, I like to think of day trading as like a one-night stand. Okay, so you're kind of getting into the trade, you're looking for the markers, and then you're getting out within the day, right? You're not staying over. Okay, you're not staying over. Now, by the way, completely no disrespect to anybody. I'm just giving you a metaphor on how you can view these things. It's meant to be comical, not really meant to be disrespectful. Okay, definitely respect women. That's key in every aspect of life. Okay. Okay, so yesterday, this little volume pattern piqued my interest to enter on Facebook. Okay, what I saw initially was a rejection of the moving averages here, using as a support, and this piqued my interest to enter the trade. At the same time, we got a lot of flow coming in on the option scanner on Discord, and that's what kind of prompted me to enter this trade. Right as I saw Facebook break out of this little zone over here, this is where I entered, and I took a call option. So the next question becomes, how do you spot that? Well, the thing is, look at the volume bar, right? But that's not enough. For people who know and have been watching this webinar for a while, that's not enough to make a decision, right? You need to have the combination of the volume flowing in, where you have OBV pointing up strongly, and you need to have a solid break out of the resistance. Okay, as you can see, this was the previous supply zone, and we broke out of the supply zone and we're starting to rally up. Okay, in fact, we actually came down here after breaking out, right? This candle, we came down here to test the support zone, and we validated it as support. The old resistance zone, we validated the resistance zone as new support. Okay, on the 5-minute chart, which gave us a clear signal here to enter this trade to the upside. Okay, we knew that bulls were in control, and therefore we took the trade to the upside. Okay, majority of us made money on this trade on the option sync Discord yesterday, and I think that it was a great trade to take intraday for a day trade. Okay, once you saw this volume bars, that was a pretty obvious signal over there, right? To see how we could actually play this to the upside. Now, the break above this level was the second time you could have played this. If you absolutely missed the first wave, what you could have done is wait for the second wave to be over, and obviously don't be an idiot sandwich and buy up here. What you would have done is wait for a corrective wave, wait for the bounce, and enter your second wave over here for a short little scalp, right? So there were two times you could have played this. One was upon the break of this, the first time here, and then to play this wave up, and then a corrective wave, and then another wave up here. So you had two opportunities to play this, okay? Now, how do you choose contracts, first of all, for this kind of a trade, okay? Do you go in the money? Do you go out the money? Do you go at the money? Well, let's kind of think about it a little bit, right? Because I don't want to give you all the answers and then you don't really think about it. So, all right, let's read some of these things in the chat here. By the way, if you're here today and you're enjoying the stream, make sure you smash the like button. That's, the rules of this stream. You turn up, there's free stuff here, free shit. All you got to do is smash the like button. And I appreciate that, because you guys all take a lot of time to be here, and, it's really commendable that you guys show up. So while you're here, you might as well kind of just Smash the like button. I said it 3 times now. All right, cool. Let's see. Let's read some of this. Smash the like button. Thank you very much. Like button smash. Pen and paper in hand. Ready for these nuggets. Absolutely. Thank you for saying that, Jason. Cool, cool, cool. Bought Intel calls. September 4th expiry. Thank you. No problem. It pays to attend the live stream, huh? Right? Think Zoom is potentially going to make a quick bullish run at some point today. Let's have a look. Dating equals trading. Mine equals blown. I know, right? Can you do us live today with us? Good morning. Moving averages you use, please. So nothing really free in this world. No, nothing is really free in this world. Okay. Cool. Let's go back to this real quick. Okay, so the question now becomes, what kind of a contract do you use if you're thinking of a call option? You know your entries here, right? How do you determine what kind of a strike you pick? Should it be in the money? Should it be out the money? Should it be at the money? Okay. Well, for me personally, for day trades, I like to go slightly OTM. Slightly OTM. And when I say slightly OTM, that means 1 to 2 strikes out. What this does is a couple of things. Okay. This gives you the delta benefit. Okay. Of having a possible in the money option when it hits your strike. And as soon as that happens, your delta is going to spike to more than 0.5, which means that for every dollar move of the underlying, you will make $50. Okay. If you don't know exactly what I'm talking about, that's fine. You just try to follow along what I'm saying over here. Okay. The general deltas for options, options that are in the money have a delta of more than 0.5. And so when you take a contract like this, what you want to do, if you're entering at 264, you want to buy a 266 call so that when the price action moves up, your contract is in the money by the time it hits your peak. This gives a nice little rush on IV plus delta, okay, that makes your option contract pop. And this is the reason why I like to choose 1 to 2 strikes out. If you choose 1 strike out, even better. More risk, more reward, right? Then how do you manage your stop loss, right? Well, as you entered the trade, your stop loss would have been on the low of the day, right? What you would do here is you would manage your stop loss by moving your stop loss up once you broke out of this resistance zone here, right? Move your stop loss up, and then as it moved higher, you could move your stop loss even further up and let your stop loss close you out. So this is stop loss 1, prime, and then prime. That's the second stop loss move up, right? So you let your stop loss do the closing out of the trade for you instead of you manually closing the trade, because you do not know how far this thing can run. And the last thing you want to do is leave money on the table. So my basic advice to you for a day trade scenario is wait 30 minutes, observe what the market's doing. Number 2, spot the volume entry, right? Make sure you confirm with OBV pointing. Wait for the momentum push, okay? The momentum push to break out of the high of the day, okay? And then after that, take the trade to the upside. Take a strike of 1 to 2 out the money. Set a stop loss. And then move your stop loss up as you go through the trade. That is a quick summary of what you should be doing when you are day trading, okay? If that is helpful, let me know. I feel like I'm summarizing everything here for you guys, so I hope that's kind of helpful for you guys. Okay, great. Good morning. What moving averages you use? This is called the triple moving average. No, 3 moving averages. Search that on the indicator strategy on TradingView, and it's the one by Advent Trading. That's the one I like using. It's a nice little setup, very simple indicator that gives you 3 moving averages. For me, I have it set on 50, 150, and 200 moving averages, and then you got to enable in the second one, the second and the third one here. Make sure that they're applying to the close, and the style is up to you. Make them whichever color you want. That's up to you, your preference. You can make them whichever color. I like using blue, green, red. Red is the 200 moving average, so yeah, I personally like that one. Okay. Let's see here. Can you do with us live today? What do you mean by live today? I don't know what that means. Can you remind everyone to never turn day trades into swings? I just need to be reminded personally that it's not a bad tip. Absolutely. Definitely, yeah. Well, the thing is though, you can make a day trade into a swing trade in a specific scenario. And the scenario is when your expiry is not a weekly expiry. Okay? Not a weekly expiry. You can only make a day trade into a swing trade when your expiry is not a weekly expiry. For example, if today you day traded a contract, right? And you used a weekly expiry, which is tomorrow. Dude, by tomorrow, your contract's going to be dead. The theta burn on that contract is going to be ridiculous. Okay? So you can't swing that trade into tomorrow. But if you bought next week's contract, the theta burn wouldn't be that significant. So you can, well, it is significant, but it's not like crazy significant. Okay? So you can technically swing it. But I don't recommend it still. I still don't recommend it. Okay? Why not at the money? Too much dollar sign? Very good question. The reason why you don't take at the money options when you're day trading is for a simple concept. At the money options have a high gamma. Gamma is highest at the money. Okay? And you need to understand this concept. You need to understand the Greeks for that matter. Okay? Gamma is the Greek that tracks how much delta moves. So the change in delta. Okay? And if delta moves a lot, then gamma is very high. And the highest that gamma is at is when the contract is at the money. So if I took a 264 strike, what happens if the trade doesn't go your way? You lose the most money possible because gamma causes delta to spike below in a violent manner. Think of it as a door. Okay, and I like to use this concept with my mentorship students. You are when volatility is high and gamma is fluctuating like crazy, you can think of it as though you are walking through the door and in both directions. You're not sure which side you want to be because your contract is going from having intrinsic value to not having intrinsic value, and it's fluctuating between that value. If your contract loses intrinsic value, that causes delta to go down significantly. Okay, and if your contract goes in the money, then it causes delta to go up significantly. So we don't like to have the volatility of delta when we are day trading. We would rather take a slightly out the money contract and have a good risk to reward ratio there in order to capture some of the risk to return ratio that we're looking at. For scalping, the scenario is completely different. You don't have a risk to reward outcome. But with day trading, you do, and you have to plan your risk to reward outcome. If you are entering the trade here, your stop loss has to be exactly a specific risk and a specific reward. And your risk and your reward has to always be in a ratio which is going to cause your trading system to benefit you in the long run. Okay? So that's the reason why not at the money. Gems, always great advice. Thank you guys, I appreciate it. CD, unfortunately, we're not doing ticker breakdowns today. This is a webinar. This is not the pre-market live stream. Kabir, unfortunately, we will not be doing that until I get my setup done. So for all of you guys that are here, I appreciate you guys giving me these comments in the comment section. By the way, just drop a little blurb in the live chat on what you would like to see for next week's webinars. I have in mind to do swing trading on Tuesday and then position trading on Thursday. Let me know if you think that's a good choice, and also remember to smash the like button if you're here. We have 86 of you guys, and I feel like we could have more likes over here. Let this video be shared to more people on YouTube, right? Okay, I'm kind of done with the webinar now. So I think somebody was saying Zoom, right? Let's see, let's have a look at it. Zoom potential breakout. Let's have a look. Oh yeah, possibly. Well, look at guys, remember this is the one I was talking about in the live stream. Look at this technical analysis. I've left it there. I'm not even going to touch it. But you guys can see I drew this in over here, and look at how perfectly it's following it. It would be crazy if it actually follows it. Obviously it's a coincidence and I'm no prophet and I can't predict these things, but this is just what I drew, and I thought that, okay, maybe we might go something like this, but this is becoming the golden arc here, guys. It's almost like I'm Noah and I'm bringing the ark. Okay, let's see here. Spreads. No. Unfortunately, long way to go till spreads. Thank you for your knowledge. No problem, Washington. Appreciate you being here. Thank you for taking the time to be out here. How do you pick stocks to trade for the day? I use a watch list that I have of my own, and I analyze key support resistance levels that I will use for the day. Also, I use the trusty StockBot on Option Swing, which is a community that I hope that you guys are all a part of. If you aren't, this is one of the most strongest communities in the entire industry. We have options flow here that I sometimes see. If I see something that piques my interest, then I take it. I wanted to show you guys some of the testimonials that came in from today's day number 3 on options trading, just to show you guys how the mentorship course is going. Remember, we had 60 students join us this week for the mentorship course, the beginner's mentorship course. And here's some of the comments from day 3 today. Day 3 EGA beginner class was mind-blowing. You can YouTube all day and not learn what T shared about options. Day 1 to 2 were must have fundamentals, so patience is key in this course. Great stuff. Day 3 of EGA, this is something you can't learn through YouTube. Today's class changed my whole perspective on taking positions in the market and what kind of analysis I was lacking before entering positions. Today's class showed me so much more, and I can't wait to put this into real-time applications and continue growing as an investor and a trader. This is a really, really great batch. Day number 3, the class showed me the extent of the gambling I was involved in and how lucky I am not to lose all my money. Dude, this is some strong stuff, right? So much to digest and comprehend. He is without a doubt a gifted person and teacher. His patience is also amazing to deal with our questions. And then let me just read one more here. Day number 3 out of 5 of the EGA beginner course done. He has made me realize that I truly was on track to lose everything. Can you imagine how many people are actually realizing this, which is actually crazy to me? And I'm so happy that I'm actually feeling so fulfilled that I'm helping these people. Continuing to learn proper risk management, avoid impulsiveness, and take emotion and guesswork out of the picture. Truly learning to trust the process, which I have heard said before, but now I'm beginning to understand the underlying process better. I was literally considering giving up trading and just buying ETFs right before taking this course. But if yesterday's trades are any indication, which were managed using these newly learned skills, I'm confident I can turn my losing streak around. Guys, I am truly humbled by these responses, okay? I can't tell you how much it touches my heart to read these, because I truly see the value that this is bringing to people, and I'm really truly happy that people are touched by these trading fundamentals that I'm putting out. And these webinars that you're attending, which you're a part of right now, these are bite-sized pieces of the EGA mentorship course I'm giving you, okay? If you like my trading style and you want to know my trading system, you should definitely think of signing up for it, okay? If you can't afford the mentorship course, this is the reason what this webinar is for. I give you bite-sized pieces of things that you should find important, and that's what I'm here for, to provide you free value, okay? Swing trading, finding puts, risk to reward, all 3 good topics. Yeah, okay, cool. Swing trading, position trading, sounds good. That would be great. Swing trading, position trading. Okay, we'll do that. Filling contracts. What do you mean by filling contracts? Best platforms to make orders for next week. Best platforms? What do you mean by that? Love these breakdown of your style. Thank you, T. No problem. Maybe take your time with the Greeks and explain them, and then spreads. We are far away from options trading, guys. Got to learn to walk before you can run. The week after next. Okay, I see what you're saying. How do you monitor and make quick decisions involving geeks when day trading? As stocks can move violently, you may have to change your strike price. Yeah, that is a very good point, and you have to make it basically second nature. So that's something that you have to kind of develop over time. It's one of those things you develop over time. You get good at reading the Greeks, and then before you know it, it's like riding a bicycle. All of a sudden, you know exactly what you're looking for. And I teach this very intensively on the options, beginner options class, which is what they're talking about right here, day 3. We just finished option trading. tomorrow we'll be doing fundamental analysis, and I have them picking a couple of tickers here. So they're voting on some tickers, and I think that Target's going to win. So we're going to probably do a fundamental analysis on Target. Plus platforms like Thinkorswim or other ones. The best platform to trade on is probably Thinkorswim, but currently it's giving issues. So that's going to cause a problem in the short run, I say. Okay then. I heard your requests and I appreciate your time here. I like to keep these webinars as short as possible. And I want to make sure that these webinars are, as succinct and as helpful as possible. So if you found this one helpful, smash the like button. It's free to smash the like button, guys, and it's free to attend this little webinar. So it would really make me happy if you just took a second out of your day to do that, because then YouTube shares the video to other people and other people can learn. So thank you very much for attending this webinar. I will be active on Twitter today, Jason. If I find some setups, I'll post it there. You know where to find me. I'll be on Twitter. For people who missed the live stream yesterday, I put out a free intrinsic value calculator. And that's pinned on my Twitter page here. If you want access to it, it's a pinned tweet. It's right here, intrinsic value calculator by me. Yours truly created one for you guys for the free. So go check it out. Okay, go check it out. Cool. All right, guys, I'm going to leave you there. Don't want to take up too much of your time. Have a good day, guys. Have a good trading day. See you tomorrow for the recap of the week. We'll do Intel recap and market breakdown. Remember to stay hedged and have a great day. Goodbye. Peace.